Hey guys, what's up? Stock Retail coming back to you today. I know it's been a few more videos, at least more frequently than I used to do, but boy, there's been a lot of news the last few days. So just kind of sharing current events, my take on them. Um, I know I've had a lot of questions the last few days. I know many of you have. I get hit with them on Twitter and YouTube. So I'm just trying to share what I'm seeing, what I believe is happening. As always on this channel, we'll try to stick to DD, but I'll, of course, share where I'm kind of speaking more opinion than DD. Today's a little bit of a mix of both. And I ask you guys not to do any trust me bros around here. So whether you're on YouTube, Twitter, Reddit, wherever you're getting your information, question it, dig, find sources, validate for yourself, maybe get second opinions, and think through your own opinion and your own take of what's going on. So today we're going to talk about what do markets and what for AMC. Just a little ape talk there for you. There's a lot going on. So some of this today, some of this just in the last day or two. We're going to talk through crypto. Perhaps you saw what's going on there. We're going to talk through Evergrande or Evergrande. Big news on them. Big news recently on Fidelity on Tuesday. A lot of the conversation I'm seeing on Twitter and some other places around AMC bonds. So we're going to talk about that. The after hours action today. A little bit about, like, we're going to tie a bow on all of this and kind of bring it all together. And then we're going to talk about options. I'm getting a lot of questions on that. We got the memo from the OCC maybe a couple days ago now. So we're going to try to go through that document and share what I'm reading in it and where I still have questions on it myself. All right, so today, boy, that's a big crypto dump, both in terms of percent and just in terms of how severe that was, how sudden and severe. So that's one of the things we're all learning these last couple of years. In these markets with this much manipulation and the ability for people to pull the rug, things can move quickly. So position yourself carefully. Think through, what assets you want to be in. Of course, I'm very, very in AMC. I mean, that's pretty obvious by this channel and the things I talk about here and on Twitter. But so, yeah, the reason I bring this up, there was a time in AMC where for quite a while, some of us viewed, if you recall, especially Sunday nights, we'd see a big pull. Sometimes there were times that precipitated let's call it a meme stock run, and other times, like specific to AMC, it precipitated or, came before a run for us. So that can be a liquidity pull sometimes. There can be big players who are pulling money out to grab cash. I think I saw a headline just before I started recording this, so it's not really included here, that perhaps Elon sold quite a bit as well. So there's definitely some big players doing some big things in crypto. But keep that in mind for a minute as you think through all the dots I'm going to show you this week and whether any of these dots are connected. As crypto dumped today, same day, today, Evergrande files for Chapter 15 bankruptcy protection in a New York court. So that's here in the U.S., even though it's a Chinese real estate company. I'm sure most of you have heard about them. For a couple of years, apes have been talking about them. In particular, probably should have pointed you to some Reddit posts I have in this video, but I didn't. A couple of years ago, a lot of us were talking about, let's say, coming liquidity crises and how that would affect the markets and how that would affect margins and holding short positions and how that ultimately could push a squeeze into AMC. So that's why this is very, very relevant. People have been looking at this kind of coming crash on the Chinese real estate market for quite a while. And if you don't know, one of the reasons it matters is there's a lot of belief and some real DD that pinpoints basically people leveraging bonds in the Chinese real estate market as part of their liquidity effectively. So in other words, if I'm on margin, I have to show that I have assets in order to trade on margin. And if your assets effectively have gone bankrupt, your assets get wiped out. And think of it like a teeter-totter. So like I said, go on Reddit and find a thing where I kind of talk about margins. It's from maybe 2 years ago. And there's basically like a teeter-totter. So if you're trading margins on one side of the teeter-totter, that's kind of what you borrowed. On the other side, you need to have enough assets to balance that out. And that can be leveraged. Leverage just means there might be more on one side of the teeter-totter than the other. You borrowed more than you put in. But there's at some point, banks or whoever you borrowed from basically says, hey, you need to make it a little heavier on the asset side or put some more cash in here because you're over leveraged. You've borrowed too much. I talk in that Reddit post how I once got a margin call for $1. So margin call doesn't mean you're wiped out. It can mean in that case I had to put one more dollar in to kind of rebalance the teeter-totter. Um, but the point is here, if I come back from that ramble, if people have used Chinese real estate as a part of their assets to borrow, you can start to hear the notion of margin calls and having to meet liquidity demands from your creditors. So it's a real big deal. I do think it relates to the broader market and it relates to AMC. Watch this one in coming days and watch the market's reaction to it. This could have some tremors. It's a big deal in terms of liquidity for a lot of people. All right, so then we also saw Tuesday the Fidelity outage. I think I saw on Twitter there may be a couple other, pardon me, a little bit of this cough just lingering, but I'm doing much better. I think I saw on Twitter maybe some other brokers or banks, a few spots that were out. There were some apes who kind of, let's say, almost to the level of conspiracy theory, not necessarily proven, who believed that potentially that had to do with heading off some moves in AMC that are basically avoiding some margin calls. I'm not sure whether that's true or not because I haven't seen solid enough DD, although a couple people I trust have kind of told me some of that. But I will tie it, if that was just 2 days ago, obviously there's a lot going on with AMC, and now we got Evergrande, and we got the crypto dump. Boy, that's a lot of things all within kind of a day and a half, right? So, you decide whether those dots are connected or not, but I'm at least watching them very closely now and wondering if they're starting to be connected. At the same time, there's a lot of discussion I'm seeing on AMC bonds, and I want to kind of talk about that. We know that the company is about to have access to sell off shares post reverse split. I did a whole video that many of you kind of saw and commented on in terms of dilution versus value creation, and it's my belief Adam and the board are going to be able to create value with those that will offset the dilution, so I'm not concerned about that. In fact, I'm pretty excited about them paying down debt, making this company stronger, and perhaps doing that at a discount, which is a return on investment. Let's set that aside for a moment. There's a lot of discussion about investing in AMC bonds that I'm hearing. I am not saying one way or the other whether that's good or bad or indifferent, but I do want to just call your attention to a few things that you really need to do DD on before you would think about something like that. So first off, a lot of AMC's bonds are what you call callable. That means, and this is kind of how in some cases AMC's been paying off debt early, if a bond is callable, that means the issuer of the bond, or in this case AMC, can decide to pay that off, close that out without permission. Just call it and pay it off. That puts some risk to bonds because if you pay any kind of a premium, and you need to research premiums and discount rates and coupon rates and the interest rate and just a whole lot of things. If a bond gets called and you paid a premium on it, you may not ever get your money back because you're counting on interest payments when you buy a bond. That's part of why you buy it. Or perhaps you're buying it because you believe the premium's going to kind of improve and you may be able to make money reselling it later. But if that gets called and you never got enough interest payments to cover your premium, you're kind of out of money. And so there's risk to those bonds, which is why some of the AMC bonds have seen some volatility in the past few months. I am not a bond expert, guys, so there could even be a couple things I'm even saying incorrectly myself here, which just further illustrates the point. You need to do research before you ever invest in individual corporate bonds. The third note I'm going to just make here, the third bullet here, is researching the idea between security notes versus corporate bonds. So like AMC has some senior secured notes. It's a little more like, you or I getting maybe a mortgage, something like that. It's not exactly the same, but there's some similarities in terms of it's a loan that's secured against assets. And I mention that because, you may, sorry, I've got a lot of noise out my window. I was trying to figure out what that was. I got some neighbor dogs making some weird noises. All right. Anyway, you need to know also what you're even buying, whether you're buying these senior secured notes, whether you're buying the AMC bonds, and I just think it's interesting that we're getting a lot of accounts talking about bonds. We saw them talked about on, well, I don't remember, guys, if it was CNBC or MSNBC, but that was kind of making the rounds on Twitter that, geez, my neighbor dogs are going nuts. I don't know if you guys can hear that, but they'll be running away soon to their owner. Now my dog's barking at them. Sorry, we're kind of derailing the video here, but that happens. We'll kind of just keep going. Um, all right, so I'm just saying you need to really research what you're even buying, and bottom line here, for me, I'm staying clear of these. I'm not buying any AMC bonds or any AMC debt. I leave that to Adam and the team to pay off and to banks to figure out. And there's a lot of banks who are knee deep in those. Not to mention there was probably some toxic debt that was shorts will sometimes lay debt on a company that they own and then short the company and kind of own both sides of that. Long story there. It would take a whole video on in and of itself. Um, and it's kind of a way you can take over a company too. As bondholders get paid out basically in bankruptcy, sometimes they even take over the company, whereas shareholders, you just are screwed. So do DD, be really careful. It's just kind of a PSA or a disclaimer. I'm not saying anything bad about the bonds. It may be great. You may know how to make money on them. There are some sophisticated investors that I've met in this AMC journey, a couple that come to mind right now who probably could do great. But if you haven't done your research, please be careful. And frankly, the whole thesis all the way from the beginning was I like the stock or I like the stonk I've put here. Um, so that's all I'll say about that for now. Just be careful. All right, back to AMC today and the news this week. So we had some crazy volatility in after hours. At one point, so here at the top right, I had sent this to some friends. I've mentioned on this channel, Webull is not my broker. I believe they're a pay-for-order flow broker. But I like to just track it on my phone. It's just an easy app to use on my phone. So that's why these are screenshots from there, from my phone. You can see, boom, we had this move in after hours. And so I think I was talking to my friends saying, oh, she's moving. And then we had not quite an equal drop, but we dropped down to basically being like from 5 points up to only 1 point up. Somewhere in the middle, we had been like 7% up. And then kind of as I made this slide, we were back to being up like 3.5%. I don't know what it is right now as I film this. Market isn't quite closed yet. It's 3:50 on the West Coast, closes at 5 my time. But so you can see it's just kind of swinging all over the place. And I talked a little bit about that yesterday too, that we're going to see more volatility. And here we are. And volatility can be our friend. You want to see volatility and you want to see volume. That's also potentially going to bring the day traders back in. Yes, they scalp us, but they also add a lot of, market pressure to the stock. So that could be interesting. When you get volatility and you get volume, you get some interesting things going on. And I guess for me, I just was personally encouraged that AMC was up in after hours, but APE was still holding up as well. You can see it was up 1% as I kind of typed this. Sometimes when we get these wild after hours moves, it's because there was some news, like that one Friday where we got the news that the settlement was temporarily denied. And AMC kind of flew 80% at one point after hours. So, but APE had dipped really hard at that point. So today, AMC up, APE holding up. That feels pretty good to me. I like that. Okay, I'm gonna bring that all together in just a minute again, but let's switch to options before we kind of round that out. So we got the memo from the OCC, if you don't know. So that's kind of the controlling group or sort of regulating group for options, and actually kind of facilitates a lot of the trades, basically. I think their mission even is for every buyer there's a seller, and for every seller there's a buyer, that the OCC kind of makes that happen. But they then also issue kind of memos on how the options will work. So I'm just going to take you through their document. All you got to do is Google for that. Just Google like OCC AMC memo or something like that. And you can see the date was from just a couple days ago. All right, so we have these option symbols that are becoming new symbols. I was not familiar with this 2 AMC. A lot of us know about AMC 1. I don't know what 2 AMC is and how that's becoming 2 AMC 2. But that's a thing, and you can go search it. I couldn't even find it. So I'm not quite sure what that is, and I won't be able to explain that. But you can see the AMC options will change to AMC 2. You can see as of a week from this memo, or so next, what is that, Wednesday maybe? August 23rd. You can see the AMC 1s change to this 1 AMC 2, and then whatever this 2 AMC changes to 2 AMC 2. Gonna have to figure out what that is. Okay, so strike prices, you see no change. That surprised me a little, but let's go through that a little bit. The number of contracts doesn't change. There's this multiplier of 100, so that just means like when you're paying the premium for a call or a put, multiply it by 100 to figure out how much you're actually paying for that contract because there's 100 shares in the contract. So that kind of stays the same. Here's where it kind of gets a little bit interesting and it takes some reading. So effectively, the memo had to do also with the settlement and basically working the settlement into not just, we're getting that settlement in the shares. I've done plenty of videos about that. See the calculator video if you want to build your own calculator to know how many shares you're going to get. But I hadn't thought through that they'll work the settlement into contracts, into the options chain. So you'll see that as I go through these. So they had these, I think it's 3 or 4 deliverables. So these next couple slides, I'm going to go through these deliverables. So 1, 100 pre-split AMC shares. This is like what's deliverable on a contract. So if basically it says subject to delayed settlement, so what's on your contract today is 100 shares, right? So it's saying, okay, until the settlement, you basically owe that same 100 share amount. But notice the pre-split. So if we get a reverse split, I think that basically means that becomes 10. So that's what's the deliverable of the contract. If I have a call and I was to exercise, I should get 100 pre-split AMC shares. But notice there's this discussion about the settlement, and we're going to go through why that is. So options will include math for the settlement. That's the top of this slide I'm reading here. I just kind of mentioned how the settlement's getting worked into the options. So you can see here, 13 pre-split. So this is, again, what's a deliverable on the contract. So again, if I own a call and I was to exercise, I'd get the 100 like I always have. If you are familiar with options, you kind of know what I'm talking about. If you're not familiar with it, you almost could maybe just skip for now, fast forward or something, or go research why I'm talking about a deliverable on a call or a put. So we have the 100, but actually now there's another 13. That's because of the settlement. So if you just do the math, you know how it's 1 to 7.5? Divide 1 by 7.5, you're going to get 13%. And that's why they're talking about this 13 or this 1.3. Or yesterday I shared about the new court case for APE, and if you notice, they're asking for a 13% dividend on APE. It's just the same thing. Again, if you haven't watched that one, I'm hoping that case gets thrown out, but go to that video if you want to know more. All right, so they're adding the settlement in. Basically, if I was to hold my calls or puts, I don't have any puts right now. I tend to just stay real long AMC. It's not always the smartest thing to be all in as I am, but I'm an ape. So anyway, if you were to hold calls or puts and then exercise them, you can see this settlement math plays in. It's not just the 100 shares. Now it's this 13 pre-split shares, or you can see they're talking about the reverse split, 1.3 post-reverse split shares, subject to delayed settlement. So this is just them kind of saying, if any of these court cases delay the settlement further, then we're not going to work in this settlement math. Now, remember that, again, back to the calculator video or other videos I've done kind of showing you the documentation of how the reverse split and conversion is going to work. Remember that we've said fractions are getting paid out as cash. All right, so look at point 3 for options. We're managing the cash payout as well. So if you were getting your, your 13 shares, but they've done the math to basically figure out, okay, so just divide 100 by 7.5. This is kind of what's happening here. There's a fraction left over in the contracts, in the calls and puts. And so they're saying, all right, well, we got to make sure that you're taken care of on your fractions with your contracts as well, with your options. So there's a cash payout of about 1/3 of a share post-reverse split. That's, again, subject to delayed settlement, blah, blah, blah. So it's just saying if the settlement goes through, you get your shares, you get your fractions paid out in cash, and that applies now to the options. Okay? So really we're just saying options still have the normal shares you're used to, pre-split. So think the math reverse split, post-reverse split. The 13 shares pre, which would be the 1.3 post, which is why then the 0.3 fractional share. That's just taking this 0.3 and saying, all right, we're going to pay you cash for that piece. So if you were to exercise a call post-settlement, post-reverse split, then you got to add all points 1, 2, and 3 together. And that's what somebody on the other side of that owes you. So there's a payout from the other side. So that gets interesting because then they've got to go find the shares that, if this was a covered call, then they had covered it with shares, but now, whoops, I got to go find more shares. I guess in theory, they're getting the settlement on the shares that they covered the call with. But we're getting real kind of deep on options. So I'm just trusting that if you know options, you're following me. And if you don't, then it's okay. I'm just not going to explain all of it today. If there's no settlement, so there's language in the OCC's memo, then basically you ignore all of that. And then once the settlement payout is determined, actually this is two different points. So the first thing is, hey, if there's no settlement, then kind of this stuff just is moot. It's not going to happen. But if the settlement happens, and once that cash payout is determined, so basically at the time of the settlement, whatever the share price was then, I think they're kind of locking in the cash payout based on the share price that day. They're just saying, so the cash payout on your contracts wouldn't change. So let's say, for instance, if I had January contracts, the January leaps or something. And I hold some calls in AMC in January. If you had, say, January calls, you can't just wait until then and whatever the price changes to, then that affects your cash payout. They're saying, no, at the time of the settlement, we're basically locking in the amount of cash you're supposed to get paid on that contract. That's this note at the bottom. Once determined, the cash in lieu of fractional share portion of the option deliverable will remain fixed. Fixed meaning it's just locked, and will not vary with price changes of any security. Okay, so that's just saying we'll figure out the settlement. They'll owe you the cash, they'll owe you the shares if you end up in the money and exercising and all of that. All of the things that I've talked about here. So we've got all these changes to the options. We've got the movement of the stock. We've got Evergrande, Fidelity, crypto, talk about bonds. There's a lot going on right now in markets and with AMC, and more coming in terms of AMC's getting stronger from a capital and a balance sheet perspective. So I keep referencing this, but I just want to show you, especially if you're new here, you can go find from back in March a video called The Pieces, and I talk about even precious metals. I talk about crypto. I talk about Adam and the board and how they've positioned us, the fact that we're going to get cash at a time when banks have a liquidity crisis. Here's Evergrande now going bankrupt. I believe Adam has some macroeconomic good sense and has kind of positioned us for a lot of what's going on in the world. So go check that out if you want to better understand and have a little more faith in this leadership team too. All right, so what's next? This is it. We're done. Last slide. No one knows, right? No one knows what's actually next. I cannot tell you any dates. I cannot tell you any prices. Any channel that is telling you they know is making stuff up and is just off their rocker. But what we do know, business is booming. We had a profitable Q2. We're in the middle of a profitable Q3, I believe. So yippee-ki-yay. Let's go.